Welcome back to a new video on the channel. Today we are going to be breaking down a trade I took yesterday on Euro US dollar, where I took 2R from the markets and my remaining runner was closed break even. So if you did watch the previous videos, not every trade is going to go, 10, 20, 30R. It just depends on what the market wants to do. So this is proof of obviously the trade being taken. If we now go onto the charts, what I basically want to do is just zoom in and identify where we're at. So the first thing that I look at when price has made a push to the downside usually is, do we have an EMA? So you can see here we had support, resistance. So you can see that this EMA, this one specifically was the 100, acts very well as support and resistance when price hits it. Okay. What I then also identified is that when price was pulling back with this most recent move here, I want to draw a Fibonacci. So by drawing a Fibonacci, I'm able to identify where price might pull back within the market on this current swing. Because if I'm looking at the market and I'm saying that there was a low, created a high, created a higher low from this one, but then created a lower high and then a lower low, technically speaking, this market structure is down. If the market structure is down, then I can expect to see price pull back to some place within this region before potentially making a new low within the market. And that's the mindset that I had when going into this trade. So you can see that this EMA is actually at the top of the screen. So you can see here, let me just remove this. You can see this EMA is at the top of the screen with the 100. I drew my Fibonacci, and I noticed that the EMA was near the 78. Now, for me, when I'm trading, I need at least 3 reasons to enter the trade. If I don't have 3 reasons, I am not taking the trade because it is deemed as a weak setup. So what I noticed is that when I started to draw my zone of confluence here, if you look to the right-hand side, you can see the number is 108.96, 108.97. But if we go a little bit higher, you can see we have the round number at 1.09. So by doing this, I look to enter at 95.5, which was here. This is where I actually entered the position. And I got lucky with this one in all fairness, because if you'll see what happens in a minute, but this is basically what I was looking at. Stop loss wise, we need to identify that if I think price is going to enter within this zone and work, then I want to make sure my stop loss is tight for my risk to reward, but big enough to let the trade breathe. So I actually ended up on this position having a 7 pip stop loss, which I probably could have gone a bit narrower, but I was comfortable with that. In terms of take profits, this is what you need to look at when coming into the markets. I have all my confluences on the screen. So the only thing that put me off targeting this low here was actually this EMA pushing there. Now, if we look, the risk to reward was still 2 to 1 or 1 to 2, however you say it. So for that reason, I was happy to just take 2R from the position. Looking back, and this is where journaling helps and take profits, if we look that if we consolidate all of these wicks here, you can see you could have probably averaged it out to include all the wicks here and ended up getting a 2.3. But I was happy with a 2R. It was Monday. I was starting the week. So what I'm going to do now, I'm going to remove everything and then let's see what happened. Price comes up. I got tagged in here. Don't know how, but it worked. And then price decided to push down. So then what happened? I moved my stop loss to break even. I closed 75% of the position. So by risking 1%, I actually managed to close out for about 1.5 and then left a 0.25% runner, which means for every 7 pips this trade does, I will gain 0.25%. If you look what happened annoyingly, price then came over. I went to bed, obviously around here, moved my stop loss to break even, so I was risk-free on the position. And if you look what happened overnight, price came back, tagged into the area, took me break even, and then obviously look what's happened this morning. Price has absolutely melted down and would currently be open for about 3R. So it's unfortunate that it happened this way, but at the end of the day, I closed 1.5% from this position and I left the runner. The runner might end up going on to do, hundreds of pips, and I've just been unlucky. It could come all the way down here. Yes, it would be annoying and unlucky, but at the end of the day, runners are there to capitalize on. Sometimes they work and you get good kind of returns further down the line. But at the end of the day, guys, I took 2R. I'm happy with that from the position. And we went from there. So I'm hopeful that you've learned something from this. Obviously, I know it's not like what most people are trading at the minute with fair value gaps, order blocks, and stuff like that. But I've never traded that way, and I don't ever plan on, to be quite honest with you. This has worked for me for about 6-7 years. So what's the point in changing it? Okay. So I'm hopeful, guys, that you've learned something from this video. Any questions, drop them below, and I'll see you in the next video.